Hey guys, Tim Bratz here. Got another episode of Spill the Beans this week. This time with my buddy Christian O'Neill. Christian hit me up on Instagram about 6-8 months ago. And you know what's cool is I think it takes a lot of courage to reach out to somebody and send them a message on social media. So I try to always respond. I respond to all my messages on Facebook and Instagram. So if you guys ever want to connect with me, hit me up. That's the best way to connect with me. But he sent me a message and asking about apartment buildings and what he should do. He's a recent college graduate, so I offered some insights and noticed that he was a big surfer around town. That's one of the things I always want to get into. So I was like, hey dude, I'll tell you what, instead of me spending a lot of time with you going back and forth, let's go and hit some waves. So he grabbed his surfboard and I met him over on Isle of Palms in Charleston, South Carolina. And we went out, I don't know, last October maybe, and caught some waves. And had just had a great conversation. The waves actually fell flat, and we just floated and hung out for a couple hours out there and just talked business and life and some things that I wish I would have known when I was 22, 23 years old. So he's doing all the right things. He's not where he wants to be yet. He doesn't have millions of dollars of real estate. He doesn't have millions of dollars of net worth. But I can tell you from what I know about success and what I know about these principles, this kid will hit it, and he'll hit it big because he's doing all the right things. So for any of you who are interested of how do I get started? What are the steps I need to take in order to just get going? I totally understand that 5,000 units is very difficult to relate to. But this is somebody who's in the real estate space, and he's just grinding and working his tail off, making offers, trying to get his first 100 doors under contract. He's got a great mindset. You guys are going to love this episode. Christian, what's up, homie?
What's up, my man?
Dude, excited for you to be here, man.
Thanks for having me out.
So, dude, I know you got a lot of stuff going on. You got a fire in your belly about building a big portfolio. Give me high-level background on kind of some things that brought you to where we are today. Dude, I love that you sent me the message. I think it was on Instagram, right?
Yep.
We went back and forth a little bit, having some conversations. You had some questions on, how to really scale into apartments and commercial real estate. And I saw that you were surfing, and I was like, let's do a value trade here.
Mm-hmm.
And so we went out and tried to catch some waves. It landed a little bit flat on the water, but at least we were able to float and hang out and have some good conversations. But tell me about what you've been, kind of what led you up to that point, and then what's been going on since then. That was last fall.
Yeah, that was last fall, absolutely. So I'll give you a little bit background about, my childhood a little bit, just briefly, and then kind of get into, when I started real estate and how it has, progressed into, what we're talking about today.
Yep.
But, so I grew up one of 4 kids, second oldest in northern Delaware, so small, suburbia. Didn't have, a huge network of people, of, wealthy people that I grew up with, but I did have a dad who was extremely entrepreneurial. Mm-hmm. So he, ingrained in my mind, the power of residual income ever since I was a baby, like a toddler. I had no idea what he was talking about, right? And I still really didn't understand the power of it and how you could harness it until I was in, honestly, junior year of college, which is crazy because I ended up majoring in finance, and then switched to real estate, which I'll get into. But yeah, I wanted to get out, right? I wanted to get out of Delaware because, there's not much going on in that state. I love Delaware, don't get me wrong, it's my home, but I wanted to venture out, meet new people, and just kind of take a leap, right? So I looked at schools down south. I settled on South Carolina, SEC football, beautiful weather, love the campus, everything just, it was very clear, my decision, right? So I went to USC. I had my dad in the back of my head. He was entrepreneurial, like you said. So he does financial planning. He does security sales. So he sells securities, on behalf of, the big financial corporations. And then he also does life insurance. So half of his, income comes actively from him selling securities, and then half of it comes from building a team of people who are selling life insurance. Yep. So he has a huge residual piece of his business that I never had an appreciation for, because I was, I grew up, we were well off, right? We were, I'd say middle to higher income family. And so, my dad did a lot of things for me, but he also taught me the value of hard work. So he never allowed me to not have a job. I worked throughout all of college. I had 2 jobs in college. So I go off to college and not knowing what I want to do like every other kid. I was an extremely anxious kid growing up. So I had, extreme amounts of social anxiety, and I don't really know why. I was always like a little guy, so I remember one of my teachers called me like Little Tyke, which is hilarious to me now, but it actually like brought me down so much. So I was just this little anxious, smaller little kid, didn't hit puberty till like junior year of college. And so I didn't know what my path was or what my direction was. And so I kind of just started trying a bunch of different things, right? I had all this fear, didn't know what to do with it. So I kind of started taking it upon myself to do some personal development type stuff and figure out what it is I was actually interested in. Because growing around,
what did that look like?
Personal development stuff. Yeah. So it looked like
books,
it was
recordings,
yeah,
podcasts,
it was following people on Instagram, following people just like yourself who are in real estate, finance, e-commerce, development, just personal growth, right? Sales guys.
And this is when you were about 20 years old?
I was about 20, maybe 19, 20 years old.
Okay.
And I just started immersing myself in all these books, right? I was taking my college classes. I defaulted to finance as a major. This is when I didn't know what I wanted to do, right? But all of my friends
go towards the money,
right? You don't know what you do, don't know what you want to do. Okay, do business, and then you can change it. That's the mindset that a lot of people have, and so that was my fallback, right? It wasn't until I started, doing this side work on my own, reading all these books, following all these people, putting myself in front of the content that I needed to, absorb in order to kind of have a change of heart and figure out what I wanted to do. So I did that, and then I saw real estate, and I came across this guy named Grant Cardone.
Yep.
I'm sure you know who Grant Cardone is. He owns a huge real estate investment fund now, and he does crowdfunding. So he's on a whole new level, but he started from nothing.
Yep.
He started in car sales and built a huge commercial apartment portfolio now. And I also actually have a little bit of money invested with him. Because back in the day when I came across him and found out about apartments and the power of compounding your wealth through passive income, I was like, I'm going to put some of my savings to work. Took it out of my mutual fund with my dad, put it into Grant Cardone's fund. And once I started to track what was going on, because I could see my distributions coming in, I could see what assets I actually invested in. I was like, this is pretty cool. What if I could do this like on a bigger level? Like, let me look at Grant's journey and how he got into it. And I started studying how people got into this stuff. And immediately, kind of when that happened, I changed my major to real estate, and kind of knew that, okay, finance makes a lot more sense to me when you put something tangible with it.
Yeah.
I'm not very analytical, and when you put a bunch of numbers and spreadsheets in front of me, I kind of go crazy.
Yep.
And I kind of lose focus.
Yep.
But when I have an asset, and it's really representing a business, okay? You have your top line revenue, you have your expenses, right? You have your net income, and then you throw a trading rate on it. Here's your value, right? Improve your income, decrease your expenses, increase the value of the asset.
That was the same way, dude.
And dude, it really makes a lot of sense. Like there are a lot of details involved, but testament that you are is, if you have the right team and proper, systems in place, you can take it to however high level you want.
Yeah.
And you're taking it so far, and you're really the one who convinced me to, drop everything I was doing when I graduated college, and start multifamily investment company.
So when you got out of school and you got into the brokerage world for a little bit, right? And then I think, how long were you out of school for?
Yeah.
A few months?
So no, I wasn't
out of school. It was a couple of years, right?
It was in school. So I was in school. I graduated last June of 2020.
And then we connected last fall, right?
We connected last fall. Yep. Yeah. At the time, during school, so I mentioned I had 2 jobs. I was working for a real estate developer.
Yep.
And I was also working for this guy who flipped houses.
Dude, I like that you sourced people who were doing the activities that you wanted to do and went and learned from them. I don't know how much they were paying you, probably not as much as you deserved, but you saw the long game there to go and work with them and actually sit down and learn from them, realizing it was an investment on your future of all the different things that you could do moving forward. You know what I mean?
Right.
So like, we go and surf. We have some good dialogue, good conversation. You end up saying, hey, I don't want to be a broker anymore. Let's just go and invest. Yeah. So like, I know that you, we were talking a little bit offline. Yep. You're doing some pretty cool stuff, some pretty ambitious stuff, man, for just jumping into it like you did. I grew more the organic way of just buying a small building, another small building, another small building, and growing it up to several hundred units before I got into 100-unit, 200-unit portfolios. You're doing a little bit different. You're jumping into big stuff right out of the gate. So like, what does that process look like, and how has that experience been for you?
Yep. So let me backtrack just a little bit. Senior year of college, while I was looking at commercial investing And while that I knew that that was my passion, that's what I wanted to do. I knew that that was what's, going to take me to, a wealth level in which I could actually do what I wanted to do with my life and make an impact on people with the money that was coming in passively. But I started out, I had apprehension. I had doubts. Just like you said, you started in single family, grew organically. Most people do it that way. Why is that? Because they see a big apartment building and they're like, I can't own that thing. Yeah. Most people they look at apartments, they don't even think twice about who owns them, right? I bet some people would even say, oh, the government owns apartment and commercial buildings. No, everyday people own apartment buildings, and it's just a matter of,
we were talking about Greystar right before we started.
Yeah.
Like, they're the largest apartment owner in the entire country. They only own 2.5% of the market share, which tells you that the other 97.5% is not really institutionally owned. It's owned by mom and pop owners of real estate. It's individuals like us who are going out there and just buying up apartments, and multifamily.
That's absolutely right. And so senior year of college, since I didn't think I could get into multifamily right away, my plan was this. I was going to start in sales. I was going to get my broker's license. I majored in real estate, so it allowed me to kind of bypass some of the educational requirements and stuff. And I immediately took my broker's test. Mm-hmm. Let me tell you, I failed my broker's test 6 times before I passed it. Okay, so there's 6 failures right there and a couple $1,000s that I spent driving around the state just to pass the test. It's designed to fail you. I even talked to somebody who, basically told me it was like that. Some of the questions, they're so ambiguous, they don't even have many answers. So I was kind of lost in what, throughout that process, and I started to learn about wholesaling houses. I took a course, flew down to Atlanta, and went to a convention. This guy was teaching a course, he had some kind of a program like you do for commercial, but for residential and for wholesaling. And I was like, okay, I can maybe do this. I took the course, paid $5,000, put it on a credit card, did not have the $5,000. Went and immediately tried to wholesale houses using the couple methods that they, told to use. And they're very traditional: driving for dollars, door knocking, going after absentee owners, going after pre-foreclosures. I started pre-foreclosure door knocking on houses in Columbia while I was in school. Terrified. I was terrified, man. I was like shaking going up to these houses, knocking on the door, barely rehearsed what I was going to say, because I feel that I do better when I don't rehearse it, because I have less going on in my mind. But one lady got so mad at me. She actually wasn't in the house. I knocked on her door. She pulled up on the street behind me, walked out with a cane. Very old, nice lady. Until she started talking to me, because she was like, get the F off my lawn, go away. I was like, I'm here to help you. I noticed off public record that you might be having some trouble, and I'm here to help. This is what I do, like, for a living. Would you like to sit down and have a conversation? And she was like, I know who you are. I know what you're trying to do. I know what you're trying to get out of me. Get out of here. And thinking back on it, that's so silly and dumb, right? And all it did was teach me more of how to pivot once you fail. But at that point, I was pretty discouraged, right? And I had a lot of those back to back to back. And I finally got my first house under contract from a wholesaler about 2 months, I think, after I took that course and went to that convention center, spent the money, got a house under contract for like $90,000 from a wholesaler. It's very tricky to get a house under contract from a wholesaler, right? To try to flip, because you have that middleman, right? So it was very hard.
There's multiple layers of the daisy chain there, right?
Yeah.
So it's everybody's got different interests, and dude, I've never closed a deal that had multiple wholesalers involved in it. If we're not direct to the seller, man, I've wasted my time so many times on that. How'd it shake out?
So it didn't shake out well at all. So just like you said, ran into some complications just communicating, right, our interests with the seller, because we had to speak to the the wholesaler, and the wholesaler, they're not licensed, right? So they don't really have. Some of them do. Some of them are better than others, but some don't really have too much of a clue what's going on, right? Mm-hmm. So that's what I kind of dealt with here. And the deal, we got an inspection. I sent it to my partner. And by the way, that $5,000 that I paid for guaranteed basically a partnership with this, guru, 50-50 split for house flips and wholesales. He puts up the whole entire cash. So no risk for me. So that's what I was sold into. I was like, okay, nothing really to lose but my investment, because he takes all the risk. So I was like, okay, this is smart. Get it under contract, get the inspection report. And I thought there was a good $40,000 of profit we could make off that thing. And turns out the inspection report came back. I reviewed it. I thought, what we budgeted was exactly lined up with what was, coming on the report. And my partner out in Atlanta, had somebody else call me and let me know that it didn't work out. They actually didn't even call me. They emailed me and said, terminate this agreement, this contract immediately. The numbers don't work. And they didn't even tell me why. It didn't tell me why at all. And I quit that program after. I owed them a couple more grand because I did installment payments, and I didn't pay them after that because of how they treated me. And I just want to make it known that there are so many people out there who are, have these educational companies, claim that they've, done these huge things. And you really got to vet out, who you're taking classes from before you go and immerse yourself in it and try to learn from them. Because I'm not saying that this person necessarily, isn't real or hasn't done the things they say, but you want to partner with the right person. And if you're going to invest with yourself.
How have you differentiated that? How do you know who's legit and who's not legit?
That's a hard question. I think it's really.
Because in the world of social media, dude, like perception is reality, and you see a lot of it going on right now. And it's not. I know people who don't have, dude, like I literally know people who talk that they make millions of dollars a year and they legitimately couldn't write a check for 10, 20 grand on a deal. And you're like, that's like making 100 grand a year and not being able to write a check for $1,000, right? Or making $50,000 and not being able to write a check for $500 or a couple $100. You're like, how is that possible? And it's there's so much garbage out there. How have you differentiated between the people who are legitimate and doing deals versus the people who are not as legitimate?
So just like you said, because of how much information's out there nowadays online, there is not a lack of information, right? If lack of information was the problem for people to go and do something with that info to get rich, then everyone would be rich, right? So what is it? It's finding the right person and doing the right things, with the right set of systems. So what I did to vet the right people and to, filter through all the BS is I talked to people. I talked to other people who took the courses already. It's as simple as that. Go and network with other people who have, either done it themselves or know somebody who've done it. So you can easily tell whether something has been, beneficial for somebody based on talking to them. And it's just, the more and more people you talk to, the better of an idea you'll get. So that's really the best way, in my opinion, to do it. Unless you have another way.
No, dude, I think don't take it for face value, right? Like there's a lot of people who talk about how great they are, but I think you're 100% right. Like the testimonials will dictate whether or not the program works, right? What do the reviews look like? And what are the results of the students look like? If the reviews are good and the results are good, then you're gonna be in great shape.
Exactly.
That means that, at least the information and the content is there. I get weary about like the guarantees and all that kind of stuff. I mean, we partner with our students too, but we're very clear about what our buying criteria is. And my director, Nick Burton, he'll be like, hey, dude, here's why the deal works or here's why it doesn't work. I'm not going to let you do a bad deal. I'd rather you not do a deal than to do a bad deal, because some of the best deals you do are the ones you walk away from, because that can sink you just as well, just as much as a great deal can make you and build your wealth. Dude, one bad deal can wipe out 5 good deals, right? So you got to be very, very careful. So I get that. And I know early on, dude, you really want deals to happen, right? Like you're trying to get that momentum, but that's the most important time to do good deals. Because if you set out on a bad foot, you do a couple of bad deals, dude, it'll tarnish your mindset for sure, your reputation, your investors, right? Like it's just going to set you down a bad path, and you might write off real estate for not a good reason. Like I know some stud real estate investors who are more in the transactional game that don't, they bought one apartment building and they got their ass handed to them on that one deal. And all of a sudden they're like, I'm never doing an apartment again. I was like, dude, you did one bad deal, right? Like what you don't do is do a bad deal and then never do another one. Like, what did you learn from it? Okay, let's make sure we don't make those mistakes again. And let's make sure you partner with somebody who knows what the hell that they're doing to help, hold your hand and walk you through this whole thing. So I think there's good deals and bad deals in every market. There's good deals and bad deals in every economy and market cycle, and in every city and everything that's going on out there. So like, what's the difference between the people who make money and the people who don't make money? It's a sound business model, right? It's a good underwriting system and process and understanding what that looks like. So anyways.
Right. And it's commitment to where you want to be, your vision, right? Because the people who, fail, quit after the first time, just like the person you just said, they are like the majority of people. Why do the majority of people, once they fail or once they, encounter some challenges up front, why do they quit? Why do they think it's not for them, or why do they think it's not suited for them? Because it didn't work out. It's not that. Like, you really just have to talk to enough successful people to realize how many times each of those successful people completely failed. Like, shit hit the fan, right? But that side isn't shown. So that's why a lot of people are fearful of this failure, right? I've gone 6 months. I started Legacy Park Capital is our firm name. I didn't actually pick the name, but I know it's Legacy, just like Legacy Wealth. My partner picked the name. It was the street he grew up on, so it's pretty awesome. We like the name, but we've been going 6 months, seeing deals every single day, right? We could have jumped on a few of them. We could, own a couple hundred units right now, but we didn't, because we have a very calculated, very conservative approach. Because you know where we are in the market right now, right? Like you said, one bad deal could wipe us out. We're not going to let that happen. We'd rather go a year without doing a deal. And do a deal in a year.
Smart.
That makes sense, and we can make, plenty in that from that.
Where did you guys, I remember when I was 22 years old. How old are you? 22, 23? 23?
Yep.
So I bought my first house when I was 23 years old.
Mm-hmm.
And dude, it never happens as quick as we want it to, right? And I didn't have the long-term mindset back then. I knew real estate worked. I knew that I wanted to start building a portfolio and stuff. But I didn't really adopt a long-term mindset until many years into the business, probably.
Yeah.
I was very transactional early on, and I was worried about what can I make on each deal initially. You guys are very calculated. You guys are very disciplined and only looking at great long-term plays. How have you worked that muscle to be like, hey, we're only doing this for long-term? How do we know that it is a good deal? Not chase the shiny objects that are quick pops of cash. Dude, I remember when I was 23, if I could have made 50 grand or 70 grand or 100 grand pretty quick and easily, I probably would have gone down that road versus being as disciplined as you guys are. So how have you worked that muscle?
Yeah. And I love being able to share this with some of your listeners, Tim, because they don't really get this side, right? And I have been asked to be on a couple other talk show type things or podcasts. I've actually declined them because I said, I'm not going to do it until I do my first deal. But when you reached out to me, and after a lot of thought, I realized that if I can help people, younger people who are just starting like me, avoid the mistakes that I've already made up until this point, because there have been plenty, then I'll do that. And I'd love to do that, because part of the reason why I'm in this business is to impact people. And that's what our vision is. We want to make enough money to not only impact and grow our wealth for our investors, but to impact the lives of the communities that we do invest in.
Yep.
And then take that money and go help people who are struggling, right?
Yep.
If we have the resources to help others, so much of the world is in distress right now. Why aren't we doing everything we can to be where we can be to help, right? So that's why we are doing what we're doing. But going back to what you said, it's how we stay diligent and not jump after the first thing we see, because I'll be honest, I'm broke right now. I don't have any money, right? I have student debt, I have credit card debt still from that course. And we're working on some few things right now that we constantly keep in rotation, because we're constantly sourcing, right? Because the nature of this business, something unexpected could happen, and some sure thing yesterday could become scratch paper today. So we constantly keep a few things going at the same time. But I think it really comes down to the vision thing. So me and my partner we started to meditate, right? So we did an exercise where we both wrote down our visions and our goals and what we thought, the purpose of our company and honestly our lives both are, because we needed to make sure, being 50-50 partners, that we were aligned, right? So it's hard to take two people who have the same strengths and weaknesses and partner them up together, because there's going to be a lot of clashing, right?
Yep.
But Cole and I are very different. I'm more of a visionary type. He's more analytical.
That's perfect.
And I'm more, he's more risk averse, and I have a higher risk appetite. And I think I also have a little bit higher of a pain tolerance than him.
Yeah.
And I think it honestly is because I've tried all these things the past 4, 5, 6 years, right? I haven't been afraid, and I've kind of manipulated fear a little bit. So some great advice I can give to younger people who have this fire inside of them that think that they can go do something great. They can, first of all, everybody can. You just got to believe in yourself enough to get there, to get to that mental state where you can keep doing the things you need to do, right, and learn from the right people to push past those obstacles, right? Because if you have a strong enough vision of where you want to be and you hold on to that in your mind, it doesn't matter what happens. I'll give you an example, right? our first deal, we submitted an offer on it, right? We lost the deal, right? It was almost 200 unit building in South Carolina, lost the deal. Huge first deal to be submitting an offer on. After that, we were really discouraged, right? We had been working for a couple months at that point. It was our first LOI, first deal that made sense. We partnered with a group that, we thought could get it done, and they could because they had assets in, the same submarket. But it didn't work. And then immediately after,
Why didn't the deal work?
we lost it. We weren't the highest bid. It was off market, so a broker had it. It was circulating around, and we had a price that we had to pay based off of a minimum return that we had to back into based on conservative, assumptions, and it didn't hit it. And we're not going to overpay for a deal just because we want a deal, right? We're going to stick to, like you said, that fine line based on our investment criteria, our parameters.
Dude.
Not emotional, because you're dealing with other people's money. And I think you can testify to this. This is such a relationship and reputation business, right?
Very much so.
So we'll wait. We'll wait on deals. We'll wait for the right one, because we know that the bad one or a bad first one can ruin everything for us or severely set us back.
So you guys have a couple things under contract now, though. What do those properties look like, and what was that process of making the offer?
So we have one under agreement.
Dude, it takes balls to make the offer. And then you're like, oh, what am I to do? I need to make the offer. I tell people dude, don't be afraid to make the offer.
Yeah.
Where the real fear sets in is when it gets accepted. That's when you
I'm telling you, man.
If you're scared of making the offer, wait until it gets accepted. Then you're really going to feel fear.
Right. Right.
But tell me about that process. So you made an offer, and you got how many units under contract right now? A little over 100?
So it's under agreement. We're working on the contract. Yeah.
It's under LOI.
It's around 150. Yeah, it's under LOI. Around 150 units in North Carolina. And then around 200 units we're also looking at, kind of right next door.
Okay.
Same broker. And we're partnering with a group who already built that relationship over the past 15 years with this broker. So we were speaking off camera a little bit.
Why did the broker bring the deal to you guys versus the partners who already own in that local market, who they already have the relationship with? How are you guys
that's who we're
involved?
partnering with. We're partnering with the group who owns in that area.
So the broker brought the deal to you, but they didn't bring it to those guys.
They brought it to all of us collectively.
Okay.
So we approached the broker.
What is your value proposition to these guys that already have a portfolio built in that market?
Yeah. So that's a great question. And we did not expect to find this group and partner with them in the way that we are, because it has allowed us to kind of, go for way bigger deals that we wouldn't be able to go for starting out. Because if you don't partner with somebody, right, you got to have somebody sponsor the loan. Obviously, you got to have credibility, you got to have the track record and the liquidity, right?
Yep.
But you really also need, if you're going the broker route, if you're not going direct to seller, you need to convince them that you're legit. How are you going to convince them you're legit over other clients that they've been working with and are loyal to, especially as a young 23-year-old, right?
Yep.
So Cole and I were like, if our main deal sourcing, strategy is going to be going after broker relationships, we need to find a group who will see value in us and then who will bring us into deals based on, what skills we can offer. So that was our strategy. And after we formed our company in late December, we went on a road trip down in our target markets down south and started cold calling brokers in touring assets that we liked that were off market too, kind of secret shopping, immersing ourselves. We really didn't know what we were doing, right? I had read books. That's all I had known about real estate. I didn't know how to raise money. I didn't know how to raise private capital. It scared the hell out of me, right? Until I met you and other people who convinced me that, all these fears were really just, things that you could, things that really were just fake, right? They're fears, phantom.
Stories in your head, dude.
Fears, phantom. Yeah, it's all fake. And if you manipulate it and, turn it into, excitement, because you can do that with mindset and, just practices to, basically be in the present moment. You can get rid of the past. So whenever something fails, like if you have a deal fail, we had that 188 deal, not go through. We didn't get the offer accepted. We immediately, went back to our vision. Where do we want to be? There are so many deals out there. So we, focus on an abundance mindset. And we thought about all the opportunities that were still out there. And we're like, dude, why are we spending one more second on this lost deal when we can go find the next one, right?
So what is your responsibility with that partnership? To source deals? Or are you guys raising money?
Yeah.
Or are you guys boots on the ground?
Yeah.
So let
me talk more about how we found this group and how they found value in us. So it's a little bit unique of a scenario. My partner, before I partnered with him, he had his own firm that he just started, multifamily investment firm. And he actually joined a program, an educational company, in which he could partner with already active operators in order to, partner and do apartment deals.
Yep.
So he made a big investment into a, kind of an educational program, mentorship, and he, bringing me as his partner, brought me into that. So that brought a couple hundred connections that we didn't have, big connections, access to capital, access to operators, access to sponsors that we didn't have before. And they actually invited us, the partners of that education company invited us out to a closing in Columbia where I went to school. So we actually went out there, me and my partner sat with them with the closing. And when we were with them, they brought their partners. So the education company principals brought their partners, who was this couple, and they were there, and we kind of didn't know who they were because we only knew the two main guys of the company, the education company. And the closing got delayed by like 5 hours. So we were sitting there, and what was supposed to be like a walkthrough, final closing walkthrough, apartment building, about, a little over 100 units in Columbia. Supposed to be a closing walkthrough. I thought we was going to be taking notes, learning a lot. And we actually spent the whole 4 or 5 hours inside the leasing office talking to everybody, just networking with the two partners and then their partners. So there are 4 of them. And we spent that whole time getting to know them a little bit, telling them who we were, because those other 2 didn't know why we were there. Our partners invited us, introduced us to them, and then we found ourselves and we had a little coffee talk for 5 hours that we didn't think we were going to have. So that alone allowed us to see that those 2 partners that weren't a part of the education company were about to retire, and they didn't want to deal with the day-to-day stuff anymore. They had actually 2 sons who were 21 and 19 that didn't really have too much of a financial background on real estate. They grew up working hands-on on their parents' properties. So they're very construction, budget oriented, not very analytical, and they didn't know how to find deals. They didn't know how to manage assets. They didn't know how to improve assets and sell them for profit. So that's where, they saw me and Cole. So while we were talking to them in the clubhouse, we said, okay, look, here's who we are. Here's what we started. Here's why we're doing it. Here's what our vision is. Here's what our goals are. Here's how we think, we can help you based on what your intentions are, with your life going forward. So they were, tired of managing stuff. They had been the boots on the ground for this education company, for their assets that they partnered with on. So they're very boots on the ground, doing a lot of the...
Are they bringing the money and they're sponsoring the deals?
So
they're signing on the loans.
Yeah, for us.
Yeah.
For our partnerships.
Yes.
Yeah, they're sponsoring the deals and bringing in the asset management, a little bit of private capital.
Got it.
And they're also allowing us to take the lead on the capital raise, but being there as a cushion, right? So we think
you guys are sourcing your own deals.
We're sourcing the deals now for them, and they realized that they didn't want to. They wanted to retire. They wanted to sit on their, couple thousand units and call it a day, be okay. But then they realized that, what are we going to do with our 2 sons if they don't really know what they're doing, right? They could lose everything, and the whole reason they built this portfolio was to be able to, create a life where they could have freedom for their kids. Yeah, and they want their kids to have that.
I think there's a lot of that, though, that happens when the entrepreneur is so ingrained in their business, thinking, hey, I'm going to give it to my family, I'm going to give it to... But like all of a sudden, and I'm not saying this is the case with them, but either they shove it down their kid's throat, or they miss games and they miss practices and they miss recitals and concerts because they're focused on the business side. And then all of a sudden the kid creates all this resentment towards the business. They want nothing to do with the business, or they're totally incapable because they've been given everything. So I feel like there's a lot of that goes on where there's, it's very much. I've seen it enough with other entrepreneurs that their kids didn't want their businesses. And so although I'm building a big business to create legacy, right? It's not really about the money. I'm really building the business for me, right? I'm going to pass down the mindset and the intuition and the ideas and the thought principles and the achievement philosophies to my kids, so that way they can go be successful at whatever they want to do. Right. And it's not necessarily their responsibility to take over dad's business. Right. If they want to, 100% they can. I'm going to give it to them. Right. But if they don't want to, or if I don't really expect them to, there will be other exit strategies or transition plans in place for me. Yeah. So on those 2,000 units, is there an opportunity for you guys to kind of step in and kind of buy them out of those units? Or What does that look like?
Yeah, so we're strictly, focusing on value add apartment complexes, right? So C and B class assets where we can go in and improve the income, just like, you were focused on. I don't know if you still are doing value add stuff, but that was, mainly your focus. So, and we're, doing that because, we can create a lot of sweat equity, right? And us being so young and, not having much to offer other than time and, our skills based on what, knowledge we acquired.
Oh, work ethic, dude. Like
right.
the key is there's people like me and like them who, dude, we've shoveled shit. Like, we've been through a lot of the hands-on, day-to-day grind, and it comes to a point where when you develop these other skill sets of being able to raise money and handle the marketing and source opportunities and just sign a loan and still get a percentage of the equity in the deal, that becomes a little bit more enticing, right? And so it becomes a quandary for that person because they don't want to do the hands-on stuff, but it creates an opportunity for you of saying, hey, I'm not to the place where I can sponsor my own loans yet. I don't have the connections to go and raise millions and millions of dollars of money, or just sit back and be more of the asset manager. I'll do the boots on the ground stuff. I'll be hands-on. I'll go out and source deals and knock on doors and build relationships, bring opportunity to you. Give me the opportunity to come in and show you my work ethic. Dude, that's solving a problem for somebody who has a problem, right? And so it does create a big opportunity, and I can see why they would want to bring you in to work together on some of that stuff.
And here's the craziest part. Like, we didn't really have too big of a business plan when we first started, right? We didn't know how we were going to get to where we want to be, and we still are obviously not anywhere close to where we want to be. We're still just getting started, but we just knew what we wanted, right? We knew we had to get there, so we just went for it. We took that road trip down south, our first broker cold call. We completely botched it. We sounded terrible on the phone. We got asked some questions and we didn't know how to answer them, and we sounded terrible, right?
But you don't even know what questions they're going to ask unless you make
that's
that
the thing.
phone call, dude.
The second
then you're
call,
prepared for number two, right?
Second call a little bit better. By the third call, we were sounding pretty good, right? And we were, speaking pretty effectively to the point where we convinced these guys that we were legit, right? And we told them who our partners were, and that got us in the door even more. And so it got us to that point where, if we didn't take that leap of faith and just go for it, we never would have met these partners from being invited to the closing. And it just so happens that those two partners who, wanted to retire and then, came to us, and, I guess because of their two sons that they have, they wanted to partner with us because they knew that we could kind of honestly almost mentor and partner with their sons who have the construction and, hands-on background, and kind of bring a different side of skill sets to bring value to the table. So we started sourcing deals for them, and we did all the sourcing for them. So we did all the outreach. We did some direct-to-seller outreach, which we've had some success with. And we did, broker relationship follow-up calls all the time. We went out and secret shopped. We cold called. We did everything, right? And we stumbled across many opportunities, most of which didn't work out and most of which didn't pencil out. But we finally found some that, do make some sense now that we believe in. And so, it really was the perfect timing, and it's crazy how it all unfolded.
Yeah, man.
Because I made the decision to do it, partner with this guy. If I never would have partnered with Cole, I would have not be where I am today. We wouldn't be here talking. We wouldn't be partnered with this group. And that group told us at that closing, they're like, I don't know how, the universe aligned this to happen, but we were never going to partner with anybody. This is perfect timing for you guys to honestly partner with us. If we continue down this path and, the next week they invited us to Columbia again to build a relationship. We went out and got drinks with them, just started to talk as people, and get to know each other. We built that level of trust, and then we became friends. And then it's a different relationship. It was a different relationship. We started seeing them more and more, talking to their kids, learning and growing together, going over why things went wrong in our offers that didn't get submitted. It's really an amazing mentorship that, I'm so grateful to have to this day. And I know Cole is, and it's allowing us to do, some pretty amazing things hopefully here soon.
No, man, it's cool. You guys set yourself up and essentially prepared yourself for success, right? Success happens when preparation meets opportunity.
Right.
You guys were searching for it, and a lot of people, man, dude, the door doesn't open unless you're knocking on doors. You got to go and knock on doors. You guys were out there at least knocking on doors, And guess what? One of those doors opened up,
Yep.
and opportunity was created. So
Yeah.
no, it's commendable that you guys at least got out there and did the stuff that was uncomfortable early on, got out of that scared zone, and got through that growth phase in order to build these relationships. So, and you're leaning into where you guys bring value, right? Like,
Yeah.
like the actual doing the boots on the ground stuff, because that's where you're going to learn the most, anyways.
Right.
Because if you don't know that side, you can't be valuable from an asset management standpoint, or a
Exactly.
fundraising standpoint, or talking to lenders and sponsoring loans. They're going to be asking you those questions, and want to make sure that you know that stuff.
Right.
So it's good, man. Tell me about, like, what's the process been? I know you guys have one deal under contract right now, and you guys are spearheading a little bit of the capital raise. What has that process been like to go and raise money as a 23-year-old kid from people who have hundreds of thousands of dollars or millions of dollars?
Yeah. So it's been intimidating, to say the least. Intimidating. It's, I guess my upbringing helped me a little bit, because I had my dad who, forced me to do a little bit of uncomfortable, things in the beginning, and kind of let me on my own and let me go and, go find these jobs on your own, go make your money, pay your own bills. So that helped me prepare myself for the, some things I would encounter in the future. But it's really just like the passion, the energy that I bring to it. Like, I love this industry so much, and I believe in what we're doing so much, that I can really get behind something, like get behind these deals and speak about them so highly, and speak about multifamily as an asset class so highly, to where I can convince them easily that, okay, this is the right person to place their money with, right? So I have just begun, my capital raising efforts and outreach and everything. But I've talked to maybe 20 people so far about it, and all I can do right now is kind of gauge general interest, get soft commitments, because we don't have it under contract yet. We have to have our attorney review things before we can put some content in front of people, and return metrics and everything of that nature. But it's been, it's been awesome.
Yeah, it's like the chicken or the egg. Do you go and find the deal first and then go raise the money? Or do you go and find the money first and then go find the deal? Which one have you found works better?
We went and found the deal first. We went and found the deals.
But even before
the deals, we went in and made relationships before the deals. And before we even saw like a single deal, I think it was like 1 or 2 months of us just, getting denied by brokers, or, learning how to talk to brokers, and, networking with operators, and, getting told no, and getting told we're too young, and that, we look silly and dumb for trying to compete with people, especially in a market like it is today, where we were told it's the hardest to find a deal that, actually pencils out.
Yeah.
We didn't care about any of that. We knew what was possible. We knew the cyclical nature of this business, and we know that it's just a matter of time before we find something that works.
Yeah, man. And there's a pocket of properties and property types that you guys are willing to buy because you're looking to build your balance sheet, right? Like,
right.
I know you sent me a deal yesterday, and I was like, dude, it's just too much of a C/D class kind of an area where it doesn't fit what my investment goals. Now, if you sent me that 10 years ago, or even 7 years ago, I probably would have bought that property, right? Because I was in a different spot. I needed to go out and build my balance sheet in order to get to where I am today, which now I can be picky, right? Now I can sit back and say, hey, I only want the nice stuff.
Right.
I don't want it's not about like being in those tougher economic and socioeconomic areas. It's more about just like the amount of calories that need to be expended in order to manage that stuff, and property management, project management, and work through all the different aspects of stuff getting stolen, during the renovations, and break-ins, and copper pipe being ripped out, and like just garbage like that I don't want to deal with anymore.
Yeah.
But I dealt with it early on because I needed to build my balance sheet. And I guess my point is, like, you're willing to go into those areas, and you're willing to put in the effort in those areas that a lot of guys like me aren't willing to do. So like there's this little bubble of opportunity that the hedge funds don't want, the REITs don't want, the guys and gals with big portfolios don't want, and then the smaller investors can't qualify for it. Right. So like you're in this, hey, if you can go buy C-class properties and build your balance sheet and get a few hundred of them or 1,000 of them in your portfolio, that allows you to then graduate up into B-class properties and A-class properties and different other types of commercial properties because now you have the balance sheet built up, right?
Absolutely.
That's what sets you up. It's not about this deal. I see so many people having such short-sightedness only about this deal. No, dude, it's about what does this deal set you up for to accomplish over the next 10 deals, 20 deals, 50 deals.
Yep.
And you guys are so young that, dude, just going and taking down one of those deals makes a lot of sense because it builds your balance sheet up enough, you know?
Right.
So, and you got the time, you got the effort, and
yeah, and it's scary, you know, going up to bat against the big guys, right? But we just know that, like, what do we have to lose? Like you said, we're young, we're 23 years old. We don't have, you know, really any, we have a fallback option. We can go, you know, move in with the parents, right? Worst case scenario. But for me, like, I don't have a plan B. So not having a plan B ensures that I do everything I can to smash my goals and, you know, go where I want to go.
Yep.
Because it doesn't give me a fallback option. I'm not going to make excuses when I don't give myself an option to go jump into a place of familiarity.
Yeah, you're not going to go get a job, dude. Like, I was the same way. I was like, no, I'm burning the ships, right? I'm either going to make this work or I'm going to die trying. And when you go in with that kind of constraint that you set on your own mindset, dude, human beings are resilient. They figure out a way to succeed. They figure out a way to win. And they figure out how to not die trying, right? Like we don't want to die. So guess what? We're going to figure out a way to survive and thrive.
Right.
And but you got to put those constraints on yourself.
Right.
So no, man, that's cool. So what does it look like from a standpoint of you're going within what, about 3 hours of where you live?
We're going about actually four to 4.5.
4 to 4.5 hours, anywhere in South Carolina, North Carolina, Georgia, essentially.
Yep.
And then from a standpoint of how many units are you guys looking for, what kind of like return metrics are you looking for?
Yeah.
Because I know you teased it a little bit, but you're like, hey, it needs to, you reverse engineer the deal based on the returns that you want to make sure your investors get.
Right, right. So there's so many different ways. That's why I love about real estate, right? There's so many different ways you can structure a deal, right? You have a completely different, you know, way of going about not even sourcing, but also underwriting, right? You can underwrite to a cost basis. You can back into a specific IRR, cash on cash, however you want to do it. Basically, what is your cost of capital, right? Are you going to JV? Are you going to syndicate? And just figure out, you know, how to manipulate those mechanics. So what we do is we're going for, you know, we're sticking mainly to the Carolinas right now. We will want to get into Georgia and Florida, I think, but we want to stick to the Carolinas right now because our partners are focused on the Carolinas, right? And right now, the most value we can bring to them is, you know, sourcing deals where they want to, you know, partner with us on, right? Makes the most sense. They're allowing us to get a great equity share that, you know, most wouldn't find until they, you know, start doing their own deals because, you know, we were able to just come in at the right time and offer exactly what they wanted and be those two people that they wanted for their sons. So it's just turned into something great, but we're looking for deals right now. Since we're in this, you know, state of the market, we're a little bit more conservative, you know, like most operators are. So we're looking at, you know, sensitivity analyses for every single deal that we do. And we want to sensitize our annual rent growth, one of the main things that affects returns, and then also our exit cap. Because, you know, 50 basis difference in exit cap can extremely, you know, affect your returns.
So when you're saying sensitize it, you're essentially padding those numbers, right?
Right. So I want to know worst case scenario.
You're being very conservative on, hey, if I can get $850 a month in rent, I'm going to underwrite it at $800 a month in rent. If I can exit at a 6 cap, I'm going to underwrite it at 6.5% cap rate. Because that's going to inversely affect the value. So the value is going to come down a little bit. And if the numbers still work that way by stress testing those numbers, then you know it's a good deal.
Right. Absolutely. Because like you said, you know, you don't want to have anything come back after closing, right? That you didn't, you know, that you're going to look at and be like, oh, you know, I missed that. If I, you know, just could have been a little bit more conservative, or if I could have, you know, looked at this a little bit harder. You want to try to kill the crap out of the deal. Because you're not dealing with your money, right? Like I said, reputation is everything. If you know, promise something to your investors and you don't deliver, what are they going to do? They're probably not going to invest with you again, right? So if the deal doesn't work, worst case scenario, and we usually go, what we've been doing is going 50 to 75 basis points up and down for the exit cap rate. What would the returns look like if we, you know, hit it out of the park and everything, you know, aligns, the market aligns with us to be able to hit those returns? And what happens if we get no rental growth or 1% rental growth over our hold? And what if our exit cap rate's 75 basis points higher than what we predicted because of interest rates?
So when you're going to your investors, are you giving them 3 scenarios? Like, here's worst case scenario, here's middle of the road scenario, here's best case scenario.
Yeah, I'm going to give them all 3 because transparency, right? I'm not going to try to fabricate anything. I think, and you might be able to attest to this, there are so many operators out there buying these like 3, 4, like really low cap deals that don't pencil out at all. And, they're going in $1 million over what your max purchase price is. And you're like, how are they making money on those deals? Some of the operators I've seen, and other brokers have even told me this, they're pencil whipping the deals. So they're fabricating, rental growth, crazy aggressive exit caps. They're saying that they can, go in and boost rents $200, first year. And they're not even like accounting for the fact that that tenant base can't support that. They don't have the income to support a bump.
Dude, they're expecting interest rates to stay flat for the next 5 years.
Dude,
cap rates stay flat for the next 5 years. Rent growth of 5% every year for the next 5. Dude, it's like, are you out of your mind?
Yeah.
There's going to be a lot of garbage that comes back on the market that people can't sell, can't refinance in a couple of years. Dude, all you need is interest rates to tick up just a little bit, because the other stuff's not happening.
Yeah.
Unless it's a heavy value add, right? Unless you're like really forcing a lot of appreciation, by turning over all the units and adding amenities and reducing expenses by a bunch of different things you can do. Then maybe you can create the appreciation, but dude, that just maybe year 1 you can get that bump by making significant improvements. But years 2, 3, 4, 5, like, dude, you're not going to get the same amount of growth every year and grow by hundreds of dollars every single year for the next 5 years. Are you out of your mind?
There's no way. There's no way. And so right now we're looking for deals that cash flow, right? We're going to buy deals based on the current income that it's getting. And, if it's...
Which is important because, like, dude, you're not going to pay for value. You're going to pay the seller for value that you're going to create.
Right.
No.
But how many people are doing that right now?
Everyone's
doing it right now.
Yeah.
Right. And so you're banking on the fact that that operator is going to go in there and take that 4 cap to an 8 cap year 1. What if they don't do that, right? He had a 15% IRR with that, with that scenario, right? What if he doesn't do it as fast as he can? Then your rent doesn't compound as fast and you don't even hit 15%. So all I'm saying is, for investors, look out who your operator is. You want to go with somebody who tries to kill deals and somebody who, looks at 100, 200 deals before they do one.
Yep.
Because you want to make sure that your money is going to be working for you and you can get it back.
Yep.
Right?
Yeah, man. We cherry pick. We look at probably 400 deals a month in order to buy 1 or 2 of them.
Yeah, that's insane.
We have a very, very tight buy box. Now, if I was willing to get into C-class stuff, we'd buy a lot more.
Right.
If I was willing to get into smaller buildings, we'd be buying a lot more. But we have a very, very tight buy box, and it's gotten tighter and tighter over time because we just don't have to do deals anymore. So like now we focus on the deals we really want to do. We stick to those.
Right.
That's good, man. So what are you going to do in order to start making money immediately? So once you go and buy a property, are you guys going to take an acquisition fee?
Yes.
I think it's smart. I think you need to.
We're going to take an acquisition fee.
What about asset management fees or anything along those lines?
We're going to take an asset management fee as well.
You're going to structure it more like a traditional syndication than
more
hybrid like I do.
Yeah, more traditional, because until we do deals on our own, until we can sponsor our own deals, we kind of have to, we're not going to kind of undermine our partners' way of doing things, right? So they have 1,500 units. They've sold another 1,000 more of their careers. They, have a certain way that they structure deals. We're going to structure deals that way if they're going to allow us to come, provide the value to them and be in the deal with them, right? So that's how we structure it. Yeah, we do an acquisition fee. We do a 1 or 2% asset management fee. And, that's how we get paid, right? From doing all the work that we did. And I know, structure it a little bit differently. But like you just said, like, the operators should get paid. I mean, you look at 400 to 500 deals to do one.
There's a lot of work,
that?
man.
What does that entail? Yeah, a lot of back office stuff that no one sees is happening, right? You got a lot of employees on payroll that you have to, have filtering through these things, right? So it's a lot to be compensated for, and I think that's a very worthwhile compensation.
No, for sure, man. I think it can get abused by some people when they start, taking sponsorship fees and fundraising fees and disposition fees and all these other different fees that can nickel and dime the deal. I'm not totally in agreement on all of those because it can eat up all the cash from the investors.
Yeah.
But if you're going out and you're taking an act, like there's real overhead, there's real costs, there's real expenses that come in on the general partner or the operator side. You got to be able to keep the lights on, man. What you don't want is your operator being stressed out about money and looking at other opportunities to put food on the table and keep the lights on in the house and pay their rent and pay their car payment and all these other things. You want them focused on your deal and getting it to the finish line.
Yes.
Right? So like you don't want them stressed about cash. You also don't want them content either. You don't want to pay them too much where they're on vacation the whole time, but you want to pay them enough definitely where they're not stressed about money, they're not content about money, and they want to be focused on that deal so that way their attention isn't somewhere else.
Right. Because you want to align yourself with your investors, right? And I know you've talked about this in your Commercial Empire event, which, by the way, I absolutely loved, right? I took it. When did I take that? It was a few months ago.
Yeah, when was that?
I don't know. January? Maybe it was January.
I did one in January and March.
I think it was sooner. It was January. But that was fantastic because in 2 days, right? Was it 2 days?
Yep.
2-day event, virtual event. In those 2 days, and I have a major in real estate, worked for the developer, worked for the house flipper, did a bunch of different things, tried to wholesale houses. So I failed and tried to do many things before. So I know, what's a legit, resource and what's not.
Yep.
And yours, I learned so much for and apply a lot of those things in my business right now.
Good, man. Appreciate that.
That I learned from you. So I appreciate that so much. So much value. So if somebody wants to get into the game now and has no idea what they're doing, they want to accelerate it the fastest that they can, just invest in your course. Like
$500, dude.
Invest.
Like there's nothing out there
Tim didn't pay me to say this. Like there's nothing out there where you can, pay that little investment amount and then go and make millions of dollars.
And get that much value out of it, right? Like everything else is a lot more money.
But people these days, can we talk about how people aren't willing to invest in themselves, right? They'd rather go blow, $1,000 on a new iPhone. And I'm not, I'm guilty of this, right? Then invest, $1,000 or $5,000 into themselves. But they never ask themselves, what's the price of being in the same place you are now on your deathbed? I am so scared. The thing I'm scared most of is being on my deathbed and thinking, wow, I had all these dreams, like the things I thought were possible that I could do. And I never even took any action. I didn't even try. Like I didn't even fail. And for what? Here I am dying. None of us know really what we're doing here, right? None of us know. We're all just taking what we can with what we have and trying to, live, right? Trying to create a nice life. It's a gift, right? We don't know the source. We all have beliefs and we're all, free to choose to believe what we believe in. But I believe that we're all insanely special. We're all here to do something and it's up to you to find what that is, right? So whatever you believe in, if you believe in God, great. If you believe in, universe, manifestation, great. But there is a power out there that we don't know anything about. And I'm telling you, it works in your favor when you align yourself with it, right? And focus on the things that you need to.
You just got to put it out in the universe, man. It's amazing how it all comes full circle. It's
crazy.
Like you write it down.
Like I told you
make
about
a declaration
meeting them.
About it. Yeah,
meeting those partners, right? We wrote it down. We rehearsed in our heads. We even taped ourselves recording of our goals, of our 1, 3, and 5 year goals, right? And mine went along the lines of something like, and our goal is 500 units first year. And that's still our goal, and we're going to hit the goal. And we're confident in that. And because we're confident, I know we're going to hit it, right? I have no doubt in my mind. So
I got a good buddy who actually came out to Commercial Empire. And he was a broker up in Michigan. And dude, for 12 months, making offers, and didn't get a single deal.
12 months,
in
a whole year.
You know what he got in his 13th month? We took down 105 units with him. His 14th month, we took down another 264 units with him.
You did with him?
I did with him. His 15th month, he took down a 50 unit-ish on his own. And then, there was another, it might have been a couple of months. And by 18 months in, we took down another 128 units with him and another 78 units with him as well.
Dude, he exploded.
Dude, he 0 units his first year.
So what would happen if you quit 11 months in?
Exactly, dude.
11 months in.
Exactly. Like we all overestimate what we can accomplish in 12 months.
Right.
And grossly underestimate what we can do in 3 to 5 years.
And also, I think we're too hard on ourselves, right?
Yeah,
you got to recognize unseen progress, right? Those 11 months of work, he needed those 11 months to get those, those deal after deal, in months 12 through 15. if he wouldn't have done that, he wouldn't have got there.
Dude.
So I think people underestimate.
500 units or 700 units is his second year in business. You know what I mean? Like
right.
You gotta.
Rites of passage, learning curve. You gotta fail. You gotta go through the hoops. To get on the other side.
It's like I just bought the mountain house, right? So like the mountain house, it's all on a well system, and then so like instead of having a hose, I mean they have the hose, but like there's other like little pumps all throughout the property and stuff. And dude, you got to pump this thing for a good 30 seconds before any water really starts pumping out, right? Yeah. So if you pumped it for 29 seconds and then you stopped, guess what? You're like, oh, it didn't work.
Right.
But guess what? Exactly. That water was rising, and it was right here, right when you stopped. Even though you don't see the effort, even though you don't see the fruits of your labor, it's working under the surface, and all you got to do is do that one other pump. And then once you get to that 30 seconds of pumping, dude, then you just need another pump every 5 seconds, right? And you don't have to like really work it like you do before. So
compounding effort, power of compounding.
It's like the plane getting it off the ground, man. It takes the most fuel to get it off the ground. Once it's up in the air, dude, the laws of physics are on its side, and it doesn't take as much fuel to keep it going.
Absolutely.
But dude, it takes a lot of work. It's a lot of effort on that initial launch, on the initial takeoff,
right? In
order to get up to the speed, you know. So
it's tough. But what do you attribute? What would you say you attribute to, what's the difference between the people that try a couple times and fail and the people who, actually keep doing it enough times to make it, right? To find what works.
Yeah, man. So I try to do this every year. It's only happened twice so far. My kids are 6 and 3, but I try to write a letter to them on their birthday, right? Talk about life or who they are, what they do, and all the funny stuff that they do and all that stuff. And so I sat down on my son's, I meant to write it for him for 3 years, dude, and it took me that long. So, and we share a birthday. He's born on July 17th. My birthday is July 18th.
That's awesome. I didn't know.
So like, I'm sitting back and I'm like, hey, this is my 35th birthday, and you're 3 years old, and I'm sitting back on my back patio and I'm writing out some stuff about him. And one of the things I decided to go into was like laws of things that I learned in my 35 years, right? Like things I learned about life, things I learned about success, things I learned about relationships or whatever. And like one of them was like the top 5 things I learned about having a successful life. And do the number one thing, and I still believe in it, and I think it is the number one thing that delineates success versus failure is, dude, just sticking with it, right? It's just the tenacity to stay with it. It's not about how smart you are or any of these, what you were born into, or the socioeconomic status. Or like, dude, people have come from far less than you and me and gone straight to the top. Yeah. Right? Like, what's the the factor is not giving up. Like, that is the biggest differentiator between success and not success, is just sticking with it. And I get it from a standpoint of like, there are some businesses that are not time tested, that you might make money and you might not make money in. Real estate's not one of those. Real estate is a very time-tested business where if you stick it out, you will have success. Right. And so it's not a matter of success or failure, it's a matter of time to get to success. Yeah. And so like, if you just put your head down and you keep on acquiring assets, eventually you'll pick your head up and you'll be like, oh, I'm sitting on thousands of doors. Right. I'm sitting on millions of dollars of equity. I'm sitting on hundreds of thousands of dollars a month in passive cash flow, just because I kept my head down and I kept on doing the work and I didn't quit. Right. Real estate is not an experiment. It will have success, dude. And all you got to do is stick with it, and eventually you will crush. Yeah, it's proven. It's proven. You just need to concentrate all your efforts and keep going, like you said. Yep. But that tenacity that you speak about, is that developed? Can that be developed, or somebody you think actually like born with that? Do you think that everyone is successful? It's either in them or it's not, or do you think that somebody who's really lazy could develop that kind of? I would say it's something that I learned over time, right? Okay. Like I think number 2 law of success, or no, I think number 3 was awareness that I told him about. Yeah. Of like social awareness, personal awareness, emotional intelligence. Some of the smartest, wealthiest, most successful people I know are not school smart, but they are socially intelligent. They're emotionally intelligent. They know how to communicate. They know how to make someone feel special, right?
Yep.
They know how to engage in conversation. They know how
to empathize.
Yeah, right. Feel for other people,
Right.
and then get on that side of the table with them and be like, hey, dude, I totally get how you feel.
Yeah.
Here's how I felt. I went through the same thing. And
Right.
here's some things that I learned and how I overcame it. But they're very reflective, and they look at things and they ask good questions. And I think that is a resource, or that's a thought principle that is a muscle that you end up working out and exercising, and eventually you start looking at different situations and you start looking at different circumstances and things that happened or didn't happen, and you start asking yourself good questions of why did it happen? Why didn't it happen? Why did I succeed? Why did I fail? Okay, what could have I done differently? And when you start going down that road, you become more thought conscious.
Yeah.
And you do these audits on your thoughts, and that amount of awareness then leads to essentially the idea of me being, and sitting back and understanding that I'm 100% responsible for my situation.
Yeah.
That was number one, or that was number two. I'm sorry, on the thing. So number one was just sticking with it and realizing that, oh my gosh, this idiot over here owns $50 million of real estate, and he's no smarter than I am.
Yeah.
If he can get rich doing this,
Yeah.
or if he can make money doing this, I'm going to get rich doing it, right?
Exactly.
And then, number two is like, I'm 100% responsible for my situation.
Right.
I'm going to go put myself
Right.
in circumstances that's going to set me up with successful people and put me in the right rooms and with the right thought leaders and the right resources that are going to set me up for that.
Right.
And and then the emotional intelligence piece is a big piece of it too. So.
Right. It's internalizing it, right? Not placing external blame on your circumstances, right? When something doesn't go wrong. And I used to do this, so I had to learn this. And we all go through, I believe, at different stages in our lives. We all have things that, happen for a reason to affect us, and maybe, divert your path and change it for the better. But it's up to you to...
No excuses, no blame, 100% ownership, extreme ownership over your situation. And, I threw money in the stock market, and the stock market went down. The friggin' stock market screwed me. I lost 20% because of the stock market. No. You lost 20% because you invested in the stock market. That wasn't the stock market's fault.
Right.
Like, you put the money there, you approved it, you agreed to put it in those stocks and those mutual funds. Like, dude, the real estate market collapsed in 2009 and I lost everything. It's all because of the real estate market. It totally screwed me. Oh yeah, dude, what about all the people who got filthy rich because the real estate market crashed in 2009? What about the people who just increased their wealth by 5x, 10x, 20x because the real estate market transitioning? Like, what did they do differently? It's not how the wind blows on you, dude. It's the set of the sail, right? Like, the same economic winds and political winds and social winds blow on all of us. Who wins the race, dude, is not predicated on the wind that blows. It's predicated based on the set of the sail of the sailboat. Right. So it's like, guess what? That's actually a refreshing thought, because I know that I can control that.
It's freeing.
It
gives
is.
you that control.
Oh man, right? Like life happens to all of us. It's not about what happens to us. It's about how we respond to what happens to us. That's like that's a huge principle in my life, and what I'm trying to convey to my kids. And that's what legacy is to me. Not giving them property, not giving them treasure and money and real estate. It's giving them the thought principles, so that way they can be 22 years old and be like, dude, Dad, I don't need your money. I'm going to do it on my own. I'm going to do it better than you, Dad, because you taught me how to do it, right? And I would never take offense to that.
Right.
I would be like, let's go see it. I'd love to see it. That's going to be an awesome, epic journey to watch.
That's awesome, because it's the mindset and the perspective that truly makes that person special and unique, right? Because they've gone through what they've gone through to get to that point, right? And that's what can make a person, like you said, I think you even said this on one of your interviews, you built your portfolio, started from nothing. If you lost all that today and started from scratch, you would have that and more in probably a shorter amount of time, right? Shorter amount of time.
It would take me 24 months and I can build my portfolio again.
Right, exactly.
And you can drop me in a city I've never even been to, but because I invested in myself and I understood, I went through the personal development, right? Like that, dude, that's really 90% of it. The tactical, technical stuff is another 10 to 20% of it.
But people underestimate how much of it is, like 90% you just said. People underestimate the fact that it's 90% mental. I underestimated that. And I was like, okay, it's just mostly tactical. I neglected my mental health. I neglected, goal setting, thinking, intentional purpose, like actualization, realization in my head. But those are actually the things that separate the ones who succeed and the ones who don't.
Totally.
It's crazy.
100% it does, man.
Yeah.
Majority of the battle is lost or won in your head.
Right.
It's not about, hey, if I had the knowledge on how to do this,
right.
I can do it. But like, that's why a lot of what I talk about, man, is and some, people think it's like that fluff in the air, ethereal, intangible stuff. And it is, but it creates the tangible stuff. It creates the success. It creates the foundation. If you are not dialed in up here, man, I'm telling you, it doesn't matter what business you're in, you're going to struggle in it because it all starts and rises and falls on this.
Right.
And once you have this in a good spot, man, like the sky's the limit.
Absolutely. And you can take it as far as you want to. Yeah. That's the coolest thing.
Yeah. So, dude, I'll tell you what, man. I always enjoy our conversations. I love what you're doing. You're on the right path. I see a lot of the successes or the long-term vision that you have is the same as what I had, right? And like, it's really refreshing to see somebody who comes out of school and isn't get rich quick. It's like, let's build wealth, right? And you're willing to forego and have some short-term sacrifices in order to have the long-term gains and successes. And dude, you're doing all the right things, man. I'm here to tell you, like, you're investing in yourself. You're working on your mindset. You're taking the actions and the activities and doing the activities that are going to create a lot of successes. And there's no doubt in my mind you're going to hit 500 units. Whether that happens in the next 12 months, what I like is like you're setting the bar and you'll hit 500 units. Will it happen in 11 months, in 8 months, or 13 months, or 14 months? It's going to happen regardless.
Or 18 months.
You just got to keep on doing the activity and realize, like, dude, you take down a 100-unit building, you just accomplished more than 99.9% of human beings on the planet from your first deal.
Right. And people have so much potential. Like, I'm only sitting here with you, and I've integrated so much stuff I learned from you into my business, and it's taken me from where I was trying to sell houses, right? I was trying to sell houses in an area where I just moved into. I was door knocking on, dozens of houses a day, cold calling and getting rejected.
Yep.
And I knew it was all transactional, right? I knew that with the vision and the dreams that I had of helping people and doing all these amazing, incredible things, that wasn't going to take me there. When you said, yes, I'll go surfing with you, when I DM'd you on Instagram, and I went out on a limb, I didn't even think you were going to read it. I was like, oh my God, this is amazing. Like, I was so excited because I knew that was going to, be life-changing if I took it upon myself to ask the right questions.
Yep.
So you alone that day changed my mindset and, took me from, being a lost, struggling, fresh out of college during coronavirus, not knowing what to do young kid, into somebody who really knew what he wanted and where it could take him and,
love it, dude.
How to get there. Just
appreciate
with intent
that,
and purpose.
man.
So.
Well, dude, appreciate
Thank you, brother.
sitting down.
Thank you so much. I love talking with you.
I can't wait to watch the journey, man. What's exciting is you're just getting started, dude. There's a lot of amazing things that can happen. Yeah. Not only in the next 12 months, dude. Can you imagine when you're 30, 35, 40, 45, 50? All you got to do is keep your head down, man. Don't look left. Don't look right. Just keep on doing the activities, taking the actions, working on yourself. And I'm telling you, like, you look up in 3 to 5 years, you're going to be like, holy shit, like, I never even imagined we would hit this. And the way that it compounds is just, it's remarkable.
It's so remarkable. And there's so much untapped potential out there in people who are on the edge of
everybody,
things.
Man, could do it.
Just do it. Just take the leap. Like, go lose that money. Go fail. And I promise you're not going to die, right? We're all going to die one day. Promise you it'll be a lot scarier than
dangerous,
the fear that you're feeling now is nothing compared to some of the things that could happen, right?
Yeah.
So
it's fear, dude. It's fake. It's made up. It's in your brain. It's a story. It's not real danger.
Right.
Like, you're not gonna die or get seriously injured from making an offer on a piece of real estate.
Right. Max yourself out in the present moment right now. Max yourself out because you couldn't. You might not have tomorrow, right?
That's it, dude. Appreciate you, brother.
Appreciate you.
Awesome. Some great takeaways from Christian. I love what he's doing. I love the direction he's going in. He's going to accomplish some big things. He's got the right mindset. He's got the right attitude. He's doing the right activities. That's all you need with a little bit of time on your side, and he's going to have some serious success. So if this was helpful for you, or you know anybody who's kind of at that same how do I get started type phase, this would help. Then please share this, right? Share this with them. Let them get the same insights and encouragement that you got from this and from Christian's conversation. And do me a favor, like the channel or like the video, subscribe to the channel, hit the notifications bell so you see the next episode of Spill the Beans that we're going to be dropping every Sunday moving forward. So appreciate you, love you. Until next time, I'll see you. Be your best.